Well, after some breathtaking volatility in the last couple of weeks, things are settling down a little bit. But out of the woods, we are not. And we are still exploring various tariff headlines coming through. But we're looking at the aftermath of the situation. We're seeing the US dollar down and out at the moment, finding few friends in this market, whilst we see gold on an absolutely rip-roaring trend at the moment. So we look at all the factors playing through in the FX markets, in gold, in equity markets, the sentiment in the ground. This is the trade-off. Well, hi there, I'm Chris Weston, Head of Research here at Pepperstone, and I'm going to be joined in 2 seconds by Blake Morrow from Forex Analytics. And we're discussing all the inner workings that are going on in the financial markets, the technical setups, the sentiment on the ground, volatility, the flows, the movers and shakers, and we discuss where the possible path of least resistance could be for these various markets coming forwards. Mr. Blake Morrow, coming to the programme. Good sir, how are you?
I'm doing great, Chris. Much better than last week, excuse me. Last week, it was a little nerve-wracking, I would say.
Well, it's a little bit nerve-wracking, but I don't know. Some people want vol until they get it, and then it's too extreme, and then they're like, oh, it's too hardcore. I mean, I think where we are at the moment is probably the sweet spot. S&P 1 week implied vol was trading, sort of implying 2.5% daily moves up and down in the S&P like that. That's not too crazy. I'm getting old now, so you want to be able to sleep, don't you, and hold positions over from time to time. 2.5% is all right. Dollar moves down. We've got trends. I love a trend. Gold, US dollar, various pairs there. I love it. I do. How are you feeling?
Well, we do have a lot of good trends developing, and you're right. The volatility is subdued just a little bit, but it is still high, and it's great. It's a perfect playground for us, and especially those of us here at the Trade-Off watching this show, because I know you probably have all of the Pepperstone traders hopping and hooting and hollering the whole time. So, I am having fun. Last week, though, I would say that I did lose a little bit of sleep. I was getting up earlier than I normally do at the 2 o'clock hour, trying to catch some of these moves. So glad to sleep in just a little bit.
Well, mate, sleep is a sign of weakness, mate. So get the algos going on if you want to have some sleep. Anyway, let's explore the various inner workings of what's going on in the market. Let's go topical thunder. Right, let's take a pulse check, see what's going on in the financial markets, because obviously last 2 weeks we've seen incredible moves. I think the Nasdaq last week traded in a high to low range of nearly 3,000 points. Insane. Obviously the US dollar got whacked. Gold continues to rally. Long end of the Treasury curve moved higher. But where we're seeing now is we're still seeing a VIX at 32%. We're still seeing vol at very elevated levels. Credit spreads, high yield credit spreads are still about 412 basis points or so. That's a bit of a worry. And people are still looking at the funding markets. The dollar's in a trend lower against the yen and against Swiss franc, and euro dollar looks like it wants to probably push a little bit higher. Pullbacks are well supported. Gold's been the absolute default hedge, and we love hedges that work. You don't even have to be looking at it as a hedge. You can just look at it from a standalone entity, and it's just going bottom left, top right. So how are you seeing everything that's going on in the financial markets at the moment?
Well, you ask, or you talk about high volatility. When I'm looking at a 4 big figure range to play in right now in the S&P, that's a big deal. I mean, I'm looking at 5,100 to 5,500. That's kind of like the edges of the sandbox that I'm playing in right now, and I think the whole market is. So when you ask about the pulse of the market, I think we are in that consolidation. We're looking for some inspiration, one direction or another, and whether it comes down to trade talks, whether we see economic data that starts to really move the needle, which I don't think is going to be here in the next couple of weeks. So it's obviously going to be just lie on trade talks. I think that's it. And you point out gold. I mean, gold, lower left, upper right. It is. I have traders in my chat room and in our community. They're just like, just buy gold and forget about it. I mean, that is where we're at. It looks like an epic blow off top. I know we've brought the charts and we've showed the channels going from here to here. Now we're in this like acceleration phase that, who knows where it's going to stop? And it's crazy to think of gold in that matter, but gold's moving up, and you're right. The dollar distribution has been very, very trendy. I am a little worried that The Economist throughout their magazine cover, about, it's got the Scream guy on it, and and
they've got a pretty good hit rate of calling the top on things, haven't they? But I want to also say,
and
go on, hit me.
Go ahead.
There you go.
No, I was just going to say, and I mean, we sit here, you look at the dollar and you're like, okay, I'm buying the euro, I'm buying sterling, I'm buying whatever else I'm buying other than the dollar. And you have to question, I do, in my mind, I'm like, is this the right trade right now? I don't really know.
Well,
and then
that's
when
what trailing stop does,
like
mate. That's what a trailing stop does for you. So just keep it keeps going. Don't hate it. Just trail your stop at the right place. Use a trailing ATR stop or something like that, or moving average stop or whatever you're going to do. But I think we just don't know. You talk about gold. Would you expect it to be at these levels? Just don't know. So, just trail the stop loss. I'll give it enough room relative to the volatility and the range, and hope it kicks and hope it keeps going. We'll see what happens. But for me, economic data obviously key. Are we going to start seeing this really fall out of bed? And what do to recession risk? Obviously, the Fed are on the sidelines for the moment. They're waiting patiently, but they could move as and when the data deteriorates. The 90-day pause, I don't think that's a done deal. I don't think, we are seeing constructive signs in most countries, but I think Trump has lost a degree of leverage by showing his hand that he's got his weakness towards the US markets, or the funding markets and various factors. And I think this idea that we're seeing Trump change the negotiation and getting a bit dirty in terms of using tariffs against certain countries, for some countries to say, restrict the logistical channels for goods to get to China, and you'll get a better tariff as a result. I mean, that's quite an interesting thing that we need to see. And of course, then we're still waiting for the 15th of May and the AI diffusion findings, really what's going to happen about export controls that's going to come out from the BIS in the US. So there's still some risks, but do we climb the wall of worry? That's certainly we're focused on. But volatility has come to a nice level. It's certainly not out. But I think US assets need a higher risk premium in there.
Right, I agree with that. Well, let's talk about risk assets. Let's talk about the dollar. And I want to, first of all, I want to give us a little bit of credit, Chris. And not just us. We do these shows live, obviously live in the market, early morning for you on Thursday in Asia. And our producer's so great about, getting it out, edited out, and out in the market so you guys can view
Awful bloke, though.
And last
Awful
week,
bloke.
Yeah. But last week we talked about, the characteristics of stocks were selling off, bonds were selling off, the dollar was selling off. And now everybody's talking about it. It was, at the end of the week, we heard some murmurs on some of the financial news networks, and then on some of the bigger ones. And then now early this week, everybody's talking about it on their channels, whether it's YouTube or whatnot. We've been talking about it for the last week, and the dollar has gotten punished. And, now that we're starting to see, some of these signs that are like a little worrisome. Again, you reference, have a good trailing stop, and just play it out as long as it can go. But I want to ask you, when you're looking at the dollar, because we're going to talk about that, and we're going to be referencing the dollar in some of these setups. So make sure you stick around for that. How do you feel about the dollar right now, where it's at? I mean, is it going to bounce? Is it ever going to come back? I mean, I know the level that I'm looking at, that I want to be long the dollar. And basically, I do believe that at some point there's going to be a liquidity crisis where everybody wants cash, but cash is not going to necessarily mean I want euros or I want sterling, I want dollars. So how are you viewing the dollar right now, and where do you think it's going to bounce? Do you think it's going to bounce, or do you think this is something that even in a bounce we're going to sell into?
Oh, I think bounces are going to be pretty limited, and people will sell into those dollar rallies. But I think for some, I think dollar against traditional fundamentals, yield spreads and interest rate differentials. Euro dollar right now should be trading at 108, not 114. I mean that's, but it's broken away from those traditionals, and people are saying that's down to capital reallocation and repatriation flows. People, weighing out a very concentrated over multi decades of a US dollar concentrated position. And so people are sort of still, that exceptionalism story. People aren't buying the China is selling assets kind of situation. We're seeing the long end of the curve settle down. But yeah, I think that divergence does seem to be a repatriation exercise to Europe, and maybe the euro's become the new safe haven out there. But I don't know. I think for the US dollar to really bounce, I think we've got to see the data coming in stronger, people repricing recession risk and saying, hang on, we've had a lot chucked at this 50-50 call on US recession. Yeah, maybe things aren't so bad. The US is, again, the resilient situation. That's going to take time to really come through. So I think that recession risk needs to come out. I also think if US equities were to start pushing higher, maybe we get the NVIDIA, the AI ruling coming out on the 15th. We go into NVIDIA's earnings. I think they're on the 18th or 18th of or 18th of May or 25th of May, one or two, and people start buying into that, and those overhangs have come through. We've got a lot of the information. People start buying into tech, and US equities start outperforming again. Then the US dollar maybe catches a bid. But again, these aren't overnight affairs. So I think that's what sort of, for me, short term, sell rallies in the US dollar. But if the data comes in hot, better, and reprice recession risk, then I think the US dollar will have a strong rally. But then again, also on the conversely, I mean, if we were to see the data really coming in weaker, and people ratchet up recession risk, then I think there's big concerns there. So, for us as currency traders, we can sit there and look at the probabilities. The price is, what is it, Blake? Blake, is the price is all you need. It's the only opinion that matters in markets. That's about it.
This is true.
It's the one fundamental. That's the way I see it. Anyway, let's go to that US equity story, Blake, because we're coming into earnings season. We've had some of the banks reporting. I thought Goldman Sachs numbers were quite interesting because, in the sales call afterwards to our investors, it went on for like 45 minutes or so. The CEO refrained from using the word tariff once. He didn't say it. He referred to it in another way. But it was a really kind of a silent protest in some ways that he just wasn't going to use the word tariff. I think with earnings season now coming up, we've got 7% of the market cap reporting this week. It really sort of beefs up into the tech plays later on. And I think you're going to get some high volatility at a single stock level. And I think a lot of investors are waiting for that earnings clear out. We get the consensus re-rating of stocks, and that will give us a firmer structure to move forward post the 90-day into the 90-day reprieve. I think that's going to be an interesting one at the moment. But how are you seeing the US equity situation? Is it, you talked about that range that we're doing. You're looking to fade into 5,400, looking to buy back in, or 5,500 and down into the 5,100. I was really wanting to buy that down, that 200-week moving average. I think that was the big level we were looking at. But so how are you seeing this sort of equity story here?
Well, I do, like I mentioned a little bit earlier, the 5,100 to 5,500 is the levels that I'm really looking at. Obviously, it's 5,500 is the previous low. We failed there last week, and so it gave you a clear, I like to call it a line in the sand. We know we're bearish below it and bullish above it because we're going to get a good squeeze above 5,500. Below 5,100, it tells me that the market's going to be a little bit, and this is obviously the S&P, the market's a little bit more worried about what's coming down the pipe. We aren't too far away. We're about 150 S&P points, which is basically 30 minutes of trade till we get there. Joking aside. But really, that's kind of like the lower end of the range that I'm looking at. We start getting below 5,100, and I do think that the market becomes a little bit more nervous. So those are the levels that I'm looking at, and I think you're right pointing out there's a lot of big earnings that are upcoming. Matter of fact, we're going to discuss one of those in our setups, one of the big tech plays here in a few minutes. So make sure you stick around for that. But we also have we have Netflix and some other earnings that are coming up in the next couple of weeks that will definitely be the market mover. And I think people are a little unnerved. You talk to people on the street, just like your mom and pops. They're like, I can't even look at the markets anymore, which tells me two things. A, there's a lot of volatility, but B, people are really over-invested in the equity markets. When I have just your average people that I'm talking to, friends of mine that have big allocations in their retirement accounts, they don't even want to look, and that means that they're concerned. And
at least they're not pushing out the retirement age. We're going to have to retire at 75 instead of 70 now. So.
Well, actually, no. I think most of these people are like, I'm going to retire at 55 now. I'm going to do it 56. So that's kind of where a lot of our friend groups at this point in time. So we'll see. I still think there is a lot of risk associated with tariffs, with the Trump administration, the the shoot from the hip type of situation that we find ourselves in, and the confusion, just the overall confusion about what we are trying to price out as far as risk goes. Well, and speaking of risk, I want to talk about what's happening this week and actually what's happening tomorrow. We have the European Central Bank that is meeting, and I know central banks have kind of taken a back seat, but we saw today with the Bank of Canada, a lot of traders were expecting the Bank of Canada might actually put the brakes on and or be a little bit more dovish, and actually give us a surprise cut. They didn't. They kept rates unchanged. The Canadian currency strengthened as a result. We saw the dollar CAD slip from 139 down towards 138.50 intraday there towards the end of the day, and the Canadian currency is still kind of strong. Now the ECB is going to be a little bit different in my opinion, because obviously you're seeing this rip-roaring rally in the euro, and as you pointed out, the euro should probably be more at 110 or 108 versus 114 where we currently trade at. But what do you think the ECB is going to do? They are expected to cut rates. Now, with the market already expecting them to cut rates, and what they're probably got to expect, like every other central bank, this tariff risk is real. Inflation risks are going to be real in the months ahead. So how do you think the ECB is going to play into this tomorrow, Chris?
Well, I think they'll cut rates. I mean, it's nearly almost completely discounted. Bank of England's probably the other one, and the RBA, I think, are really interesting when we go into their meetings in May, where we're actually pricing a small chance of a 50 basis point cut, which I don't think is going to happen. So there could be some higher volatility around central bank meetings, but I think the ECB cuts 25 basis points is nearly fully discounted. So you shouldn't necessarily get too much volatility in the euro or euro assets from the cut in isolation. Whether the ECB commit to, they've got 87 basis points of cuts being priced in over by the end of the year, so that gives you sort of 3-4 cuts. The market's sort of toying up. Whether they commit or give their sort of guidance to that, I'm unsure. I don't think that's probably going to be the case. So there could be some, will the guidance meet that pricing? And that's where we could get some volatility in the euro. The other factor, of course, is that I do think Trump has lost a bit of leverage around that, because he has shown his hand to the world that he is very sensitive to market dynamics, either through funding or long end rates. And people said, well, on 2nd and 3rd of April, we probably didn't have a huge amount to work with. But now, whilst we'll get punished if markets de-risk, if enough nations, want to get a little bit more from the tariff negotiations, they probably can now, because they know that markets shit themselves again. He's basically got, we've seen his hand, but Europe's probably the centre of that, and that's my point. Is that this idea that they will match the euro on their reciprocal tariffs, but as through this period of negotiations, what happens with VAT? And I think given that Trump has revealed his hand, they may say, look, we're not going to drop our VAT rates, and we've got to get 19 countries to commit to that as well. So. I'm not so sure how this all goes down, but I think ahead of that, the ECB will take a, kind of, I can't really say the word, but kind of a vague situation around that. So we're going to cut rates, we're prepared to do more, but we want to see the full fallout and what this means for inflation going forward. It's probably the best way I look at it. All right. Yeah. Anyway, let's get to, that's a setup. All right, let's go to gold. You have to cover gold. I mean, we have talked about it at length. But, I think I look at the GLD inflows, and they've been really pretty buoyant. We've seen outflows of the GDX, which is the gold miners ETF. But if you inflows into the GLD, have been consistent. They've been strong, and I think that's given the gold price a lift. Now, what we've got here is, obviously it's been ripping. We're up nearly 30% this year. You might want to look at things like divergence and RSIs. I didn't put that on there, but, I think probably the best way for me is to stay long. I've got like a 5-day exponential moving average. I think if price, were to close below that level, maybe I'd look to trim back. We've got, the 5 and the 20-day moving average there. If we were to see that close, and that's probably going to be a slower moving one because price is moving so fast. If you were to see that, you'd obviously surrender a bit of gain. So I think, take a bit off for me, on a daily close below the 5-day exponential moving average, when you get that systematic crossover, and you could use a a 5 and a 13 but moving average, and when that crosses over, then maybe get out of the position completely and wait for the momentum to re-establish itself again. But I'd just be using a simple moving average system or an ATR trailing stop loss just to stay in this, because when as a trend follower, momentum, when you're buying stuff that's strong, I mean, it's hard to buy now, of course it is, but what you're looking for is really the outlier in a distribution. You're not looking for profit targets. You just want it to run and run and run and run. And, trading stops are really important in that situation. So it's just doing everything right now. I think that the ET inflows are there, central bank buying. It's working as a hedge against everything that's going on in tariffs. But hedges that work are great hedges. And, this is a momentum beast right now. So, I'm just using those moving averages to stay in, and it looks good. People ask me, where do you think gold's going? I said, I have no idea. No one knows. But I wouldn't want to be short right now.
Oh, sure as hell wouldn't want to be short. I mean, the A, B, C, D or flag pattern that would be at the very tip of that, suggests about 3,500, but that doesn't mean technical levels are like speed bumps at this point. You just kind of roll right over them. So who knows, Chris? Who knows? But I got some technical levels that are pretty important, especially with Taiwan Semiconductor. I said Taiwan Semiconductor tomorrow. We do have earnings, and what you're going to see is, if you look left and you look at the double top from 2021, 2022. That comes in right around the 144 level. And you'll notice that in the last, we just call it like the last 12 months or the last year, we tried dipping below that, whether it was regarding earnings or whatnot, but it was immediately bought up after that. So you notice that we're just perched right above 144. We're currently trading at about 151.50, 151.60. What I'm going to be looking for as far as earnings go is, as long as we stay above that level, that's your bull bear line that I like to talk about. You stay above, 144, it's still bullish. If you get a daily close below 144, I think the market's at risk of a deeper pullback. You look at, some of the other semiconductor stocks, and they're not necessarily acting well. I know it's going to be, this is going to be a standout just because earnings are tomorrow, but I think it's worth noting, because if you see a daily close below 144 after tomorrow or going into the end of the week, the key words are into the end of the week. You might see some additional selling as we head into a long weekend. So that's something to be keeping in mind. I think it's a good setup going into the end of the week. Yeah, good stuff.
Right, I want to bring up the Aussie dollar because it's, I think last week we may have been seeing extreme fear, or we saw trade down to 59 cents, below 59 cents, or into the low 59 cents. And that was, people were, where's this going? It's this collapse of the Aussie dollar, the Pacific peso, they were calling it. And it's just snapped back from that point there as well. We're now testing the former end of that range at 64 cents. Now, why is that? It's just, partly it's a US dollar play. Everything, the US dollar's down versus everything. We had seen some more constructive signs around, China have come out and said that they will talk to the US, but they need a representative, and the US needs to show them respect. It does show that at some stage they will need to. China will need to talk to the US, because the longer this goes with these tariffs and the impact that that's had from exports, you are going to see massive declines in GDP if this goes on for another 12 months, which it won't. So we've probably seen a bit of Aussie dollar buying on the back of that. And a more sort of lower volatility that we've been seeing on the markets. But this is a US dollar play. Now, the question is can this push through those highs? We obviously saw the downtrend breaking, the push, the sideways consolidation, the big move down, the rejection. Up it goes. 64 cents is the level we're watching. Will we see people looking to scalp around those levels? Will we see it close back above? We'll obviously watch there. But it's a key level for me, for Aussie dollar traders. The Kiwi actually looks even better. We've had 6 consecutive days higher. And that's actually outperforming. So that chart is actually making higher highs and breaking out. But for me, 64 cents on the Aussie is a really big one there.
All right. Yeah, it's a big one, Chris. I've tried to play it a couple of times up there, and I keep getting suckered in thinking it's going to break out. And of course it doesn't. So I'll be watching that one very, very carefully. Speaking of dollar pairs, let's just talk about the dollar index as a whole. The dollar index is actually perched below its breakdown point, and that comes in just above 100, about 100.20. And it's in a bear flag pattern. The dollar is actually getting a little bit of a lift right now, just as we're speaking, as we're actually filming right now. There's some comments from the BOJ from Akazawa, who's making some comments on negotiations. And so we're seeing a little bit of dollar strength on the heels of that. But right now, overall, the dollar index remains in sell rally mode. And I think while we remain below 100.20, I think the bear flag looks like we're going to point lower. That would put the euro probably up in the 115 to 116 range, I would think, if that plays out. I do want to continue to keep the dollar on the short side as long as we're in this formation. But Chris, this isn't good. You know, when you have an asset like the dollar that falls and it's not finding any type of recovery, it is a little bit of a scary situation, in my opinion, with especially if you're dollar bull right now. So if you're dollar bull, you got to be a little bit more careful at this stage in the game.
Yeah. No, I agree. I think one to watch, and if that starts getting a wriggle on again, then sinister. But yeah, I think there's been times where the US dollar's down, treasuries are down, equities are down. Feels like the US probably won't be around for much longer in that sort of situation. You might want to sort of ship yourself over to Australia.
I might as well. I'll get better sleep. That's what I'm gonna do.
Get yourself on that business class flight over and get your best sleep. There you go. Anyway, let's go to play of the day. I'm going to go first. I can see they're both sterling based, so it looks like I started this and you're going to copy me. So we'll have to see what the views start. But if I'm going to go for sterling Kiwi, because this is at a crossroads, it's an inflection point. I'm waiting to see. So this is really front of mind for me in terms of what happens from here. So I can't really give an explicit call, but it's one that I'm watching. And you know, you take the time frame down from here into a 30-minute chart, something, an hourly chart, wait for the market to reveal itself, and there's a trade, in my opinion. So does this bounce off that horizontal support and the uptrend support? I suspect it might. You know, Bank of England beginning of May. I know it's a long way away in these markets, but you know the market is pricing a 10% chance for 50 basis point cut, which the Bank of England are just not going to do, in my opinion. You know, unless something really breaks in the financial markets, and I suspect that's kind of what we're pricing, is this residual risk that something bad could happen in the short term. Kiwi, don't really like the Kiwi too much. I mean, the Kiwi economy is still rubbish. But yeah, the market price is the price. If we were to see this breakdown and trading through these lows, probably a more function of it being a higher beta play and risk coming back into the system, which we're not seeing at the moment. Yeah, obviously that break of the horizontal support, you know, the trend, I think would be a really good shorting opportunity. So really like the setup. Which way it goes, I think is going to be a very powerful situation. So you wait for their flows to tell you. And I think, you know, either it's going to rally hard from here, or I think it's going to break down hard. So I think this is one that rather than prophesizing, we're looking to react, but it's a really good setup. It could go either way.
Well, speaking of a setup, this is a setup, and I don't have any exposure right now to the pound dollar. But Chris, I'm going to try to play it the same way you are, and I put the cable up at, you know, channel resistance. It's around the 133 level. It's also the 88% retracement of that entire move that you see on the screen. I haven't bought the cable yet, but I know the dollar's weak, and I think the cable is going to play a little bit of catch up to the euro. And I know our colleagues across the pond are probably like, oh no, not sterling. But look, I think it's holding up really well. It's been this insatiable ride higher too. It's just been grinding. If you've been short and you've been trying to short sterling, you've probably had a very difficult time doing that. So, you know, if it gets above 133, I'm actually looking to play it to the long side on a breakout higher. And then if it gets above 144.50 or 134.50, which would be those trend highs, I would be adding to that on upward momentum. So I am looking to play sterling to the long side. I'm not long yet, but I'm looking for that breakout to the upside, because I think many people are trying to sell into this rally. And like I said, they're probably pretty frustrated right now because it's just not backing away.
Do you know what else, Blake? Yeah, on the equity front, could go either way. It's tough. You need to see a bit more definition come in. The dollar's down, it's getting smacked, but you really want to see a bit of a flush out. It's really hard to sell US dollars here. Gold, love gold, but it's just so over-owned and over-loved. It's hard to buy here. So really the system just needs a proper good old flush out to get us back into the trades, right? I don't know. That's why I said.
Yeah, I mean, maybe we get some pullbacks to get into a trade, but sometimes those trades just take off, Chris, and they take off. You got to respect the fact they're taking off, and I look at it like you either get on the train or get out of the way. That's you got two options, right?
Or vanilla ice. Will it ever stop you? I don't know. Who knows? Just keep going with it. Anyway, Blake, thank you very much for being with us today. Thank you, guys and girls at home, for being with us. And if you like the show, smash the like button, subscribe to the show. We'll see you back next week for more of the trade-off, and have a great Easter for all those who observe.